We are back ahead of the May FOMC meeting. We'll be discussing our expectations for what the Fed and Jay Powell will say and do, the latest with Warren Buffett retiring, what that could indicate, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, hit that like button. If you're new here, subscribe to the channel, drop some comments, and remember, nothing that Kevin or I say is financial advice. So please do your own research for making any buys or sells. Kev, it's good to see you. We have a busy week ahead. We had a lot of mixed data last week that we can discuss as well. We didn't do a Friday show, so we can kind of circle back to that if we want to use some lingo there. How are you doing today, buddy? And what are your thoughts on the state of the market?
I'm doing great, man. Looking at the market and everything right now, last week I was super bearish. I was like, all right, there should be some type of pullback coming in. I still think that. I think a lot of things over the weekend kind of gave more reason to believe that as well. Obviously, some of the words that Buffett came out and said, which if you're going to bet against that guy, I mean, good luck. So I kind of took what he had to say as, I think pretty trustworthy. Also looking at some of the things that I was having issues with last week, right? Like I was telling you in house that some things were extremely expensive when they should have been fairly cheap. It was just the inverse, but there was still some value to, I guess, the inverse of what was happening in the market. So that showed me that there is definitely some hedging still going on out there. We're looking at the market today. We still got FOMC this week. We still have OPEX too. That's another thing that can bring in some volatility, especially with how much money is pulled into the market in April into May. There's a good chance we could see a little bit of that flush out before OPEX. So looking at everything right now, I don't think anything has really changed necessarily, but we just have some more stuff that we can go over that can kind of see if that does eventually lead to something more important in the next, week or so.
Yeah, so let's go back to the end of last week. We saw GDP data come in. We saw a lot of jobs data and inflation come in. The unemployment report on Friday showed more jobs added than anticipated, and that the unemployment rate still sits at a pretty low 4.2%.
I don't believe
Combine that. Yeah, I don't know if I do either. I don't know. Combine that. All we can do is how that's going to impact the Fed's decision. The PCE data that came out earlier in the week, back on Wednesday, that combined with the job data showing that the labor market is still strong suggests that, we're obviously not getting a rate cut on Wednesday. Like that's been pretty clear for a while, but it also increased the probability of no rate cut in June as well. So that number drastically increased to about a 60% chance of no cut, meaning the likeliest would be July. So does something break in the system before then? Possibly. We've seen markets kind of take a mixed reaction to that, all this uncertainty as well, still with the tariffs. And that showed, we didn't talk as much last week about earnings, but there are quite a few companies that just aren't offering forward guidance right now because they just have no clue what to expect with tariffs, if they're going to be higher, if they're going to be gone altogether, what that's going to do to their revenue. So just still a ton of uncertainty out there. We've seen the market opened red this morning. It's now bounced. So we're seeing a lot more green in the charts. So it's really, really strange right now. Like, what are you seeing? We can talk about Asia also if you'd like to, but what are you kind of looking at the moment?
Yeah, Japan's been closed. It's closed yesterday, and it'll be closed tonight. Tomorrow they come back on for his market holiday. But, something that not a lot of people are talking about tomorrow, the trade balance data is released coming at 8:30 in the morning. That could be another thing where it's like, given the tariffs, maybe there's been a lot of disruption in that. So we'll see if that plays in the market. But, the data has been very mixed. And I feel like the unemployment data kind of helped the markets push up a little bit higher. But once you got to this weekend, Trump started opening his mouth again, right? He didn't say anything all throughout last week. It was all kind of like bulling up the market. And then over the weekend, we find out that reciprocal tariffs are still available for Japan. They're not getting away from that. There's a lot of things that are like there was no trade talks scheduled for China this week. The markets didn't like that, and the futures open. There's a lot of stuff that's still out there that it's like, okay, are we going to just do a complete replay of Liberation Day? And he has another holiday coming up too, doesn't he? Does he not? I feel like there's another one coming up soon. It's in May.
Oh, I have no idea.
He's been making up holidays left and right. But
he just wants a reason to have long weekends to go golfing, like most people who are at his age.
My goodness. Well, Joe Biden preferred just sitting on a beach eating rocky roads. So I think Trump's one of a kind. But yeah, I mean, looking at a lot of that stuff, it's like, I think we're in a very similar scenario to where we were a month ago. OPEX leading into that, we're getting FOMC. Once we get the FOMC out of the way, we kind of have some clarity, especially if Powell isn't in the best of moods. He could talk about stagflation that could scare the shit out of the market. We could talk about tariffs coming up. I feel like there's going to be a lot more talk in the later half of the week than there is going to be in the front half of the week. And that could be what pushes us down a lot further, because there's a lot of things that are out there. The VIX, let's look at the VIX. This thing is just, I think, ready to go. Now, do I think it's ready to fly up insanely high? I don't know, but it's a very interesting scenario where we are. We broke out of this, obviously time-wise, but you can see that it's at just pretty much zero on the stochastic RSI, and the MACD turnover, it's negative, and it looks like it's starting to eventually curve. So basically, if we start seeing some volatility kick up in the next day or so, we could be looking right back to where we were, like in late March, the 25th to 26th, and we could have another run up very similar. Maybe even goes up and fills, we have a gap here at like 37.5. Maybe it goes up higher to hit this 60 level up here. I still believe, it's just kind of wild to say that we have a huge volatility event coming in the end of the year, but I wouldn't be surprised if we get another like leg up. Maybe it doesn't go as high as 60, but I definitely think that there is a chance we can go to like this 37.25. From where we are currently to where that is now, it's about a 60% move to the upside. And depending on how fast or slow it plays out, we could be looking at a fairly big pullback in the S&P and the NASDAQ. A lot of those things are kind of lining up with that too. Like look at the S&P right now. Don't mind all this crazy shit going on over here, but volume's dropping. You got the MACD turning extremely bullish, but looks like it's coming to a point where it's going to be curtailing. I don't even know if curtailing is the right word. It's like curving. What do you call that shit? Arcing. It's like coming over to the top. It's going to be probably turning over at some point. Stochastic RSI is 100 and 100. And this is on the daily, right? I mean, if I even pull up this on the stochastic RSI, maybe push it up a little bit higher, maybe get to 57.88, but you also have the midpoint at 54, and then you have the lower point at about 550. Yeah, about 5,000 or so, 50 or so at that level. So, and that's across the board for everything, right? You can see that there is a lot of levels down here. There's some gaps that can be filled on the NASDAQ. You look at actually, I'm looking at the wrong one. There we go. Some gaps on the NASDAQ, gaps on the Dow Jones, and the S&P also has a gap down here. So I think like best case scenario, you fill that gap, right? If it's any worse, then, you're looking at probably close to 5,000 for the S&P again. The question is though, because you and I both agree that there's probably not going to be a rate cut this time around, how do you juice up markets, right? There has to be some type of QE that pushes the markets up higher into the end of the year, which is what I think is probably going to happen. I don't know if it's going to just be a slow bleed till, Q4. I don't think that's the case, but I expect there to be some type of liquidity that comes in. We talked about in that post yesterday was that liquidity is drying up. So there are hedge funds and investment banks that are shorting ETFs because they can't get direct exposure to the assets themselves, right? It's a lot cheaper to short some of these things and, some of those plays. And that was what I was experiencing last week when I was trying to buy some calls on things that would be hedges against the market reversal. So seeing that out there, we're still fighting for liquidity. I don't care what happened with the yen carry trade. I think that's just momentary. We're seeing tons of like things in the forex markets just absolutely going out of whack. The Taiwanese dollar had a really big night last night. We just went absolutely parabolic, and you're seeing the yen kind of pulling back below that 144 level, And then you got the dollar that's back under 100. So there's a lot of things that are still in flux. And I think that we've pushed really hard to the upside. But again, it comes down to liquidity. And I have a funny feeling that there's going to be another wash in this market.
Yeah, I don't really see like QE coming in the near future. Like maybe
Agreed.
in the back like 4 or 5 months of this year, but like maybe in Q4 it comes around. But I feel like you should know what Powell's going to talk about on Wednesday and the tone he's going to bring. I think he's going to be coming out pretty hawkish on Wednesday. I think he's going to be talking about how the fact that like the Fed, with the data we've seen, with the job market continuing to be strong, inflation being persistent, above their 2% target, blah, 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 that they're not going to, and the uncertainty with the tariffs, that they're not going to be able to cut anytime soon. I think that we could see, I wouldn't be shocked if we didn't see a cut in July either. Like there's a really good chance that we don't see the first rate cut until the last quarter of this year. And so what is that going to continue to do to people who are in debt? Like we're seeing some cracks in the housing market too. We're seeing, prices begin to come down a little bit. Rates are staying up. Like foreclosures and bankruptcies are increasing. Like there's a lot of things that are kind of teetering on the edge. Yeah. So, the only way that I see them cutting in July or in like, the next few meetings is if something bad, like really bad happens, because there's no reason for them to like, they don't care what Trump, like Powell has made it abundantly clear that he does not care what Trump has to say about what they should do with rates. He has his targets and he's going to stick to those and he's going to see the job through. And if that means that something has to break for them to make a move, then that's what it's going to be. It's not going to be Trump blasting off some tweets that are going to make Powell change his mind. Like it's going to be actually something systemic financially.
Yeah, 100%. And again, I think that the Federal Reserve failed this entire QE process. QT process, right? Since 2022. The funny thing is now you got Trump with his policy on trade that just complicates that mess even more so. So I think what we're probably going to see is something break, because I do expect QE to push the stock market higher for them to sell off one last time. It's going to probably be a ranging market from here till October. That's my opinion. I don't think we're going to go lower than where we were the first dump, but I do think that we're not going to go higher than where we were the first pump. I think it's just going to be back and forth within this 5,000 to 6,000 range for the S&P. Again, I'm just speaking for the S&P as a whole. The NASDAQ might be a little bit crazier given how frothy that is. But when we look at something that could potentially get worse, it's the Treasury market once again. We're back at 4.3.
Real quick, I will say, like, if we want to, like, that was the bear side. If we want to look at it from a bull side, there's a chance that, like, some of these trade talks work out. Like, things are happening with India to where, we're seeing some negotiations and some deals being made there. If these trade talks work out and it leads to some positive things, that could really accelerate the market further. Like if it shows that like, hey, some of these deals are working, the tariffs are, the cost for a lot of imports for the US are coming down. That's going to help with inflation. That's going to help with rate cuts. So like there are cases on both sides to be made here. I think the most, like when I view the most likely outcome is no rate cuts for the next 3 meetings. The market does not like that. It sells off a bit. Then we find out about some of these deals. The Fed begins to cut, and then we really start to lift off into the late Q3, early Q4 of this year. Like that's what I think is going to happen. But I've been wrong before, so we will just have to see. So go ahead with the treasuries, though.
No, I absolutely agree. It's, again, like I said, ranging market. I'm waiting for there to be a moment where it's going to be really bullish because I do expect a summer rally just so they can sell again. And that's kind of what it's going to be. And I'm sure the narrative will come out that the trade deals are working. And again, don't forget, this is the administration that tweeted out a picture of Trump as the Pope. So, anything is possible when it comes to
also, did you see the one yesterday for May 4th? Trump is a Jedi.
Yeah, why'd they give him a red saber, man?
Because they don't know it.
Just how hard is it to do blue? That's in the flag too.
Or green.
Or a white one.
I mean, well, yeah, or yeah, because of the flag. Or a white one. Yeah. But all right, let's go. Let's go to let's go to treasuries. Yeah.
All right, so the 10-year, once again, Japan last week said we're not gonna, we still have a ton of U.S. Treasuries, then they retracted it. They kind of walked back that statement. But Treasury yields are going up since they kind of walked back that statement. So that tells me that there's a good chance that they're still selling off, a lot of U.S. debt. We talked in the past about giant spikes. There it is. See, there's the 2 year. Look how much it shot up. That's someone dumped a fuck ton of 2 years. Probably didn't. That's not going to be talked about at all. It's like a 3 month. 3 months. We're waiting for these, and I think those will come back online once Japan starts trading again this week. But you're going to probably see a lot of those crazy wicks, and you're going to start seeing, the 10-year get, weaker and weaker. So obviously the yields are going to go higher, and we're in this bull flag for the 10-year. So I think that as the year progresses and we do get this summer rally, no one's going to want treasuries necessarily in, the majority of the summer, because you're going to make way more money in the equity market. So if that's the case, this 10-year is probably going to fly pretty fucking high until you get something that's catastrophic, or they start hedging, come September, October. Maybe they start doing it a little bit earlier in August. But I think that this is also a perfect catalyst for us that kind of shows us that we are probably going to see a ton of liquidity come in. Question is when and by what means, right? Maybe it's the yen carry trade unwind that allowed us to rally from August till, honestly, Trump rang the bell on Wall Street. That was literally the top of the market. So there's a 3-month juice. If the yen carry trade unwind happens sooner rather than later, then that could be, 4 or 5 months of us just going to the upside, along with trade deals and along with all this bullish talk. It's very possible. And, I'm looking at the yields right now. They continue to deteriorate as they are. I expect something bad to happen in the Forex currency markets that we'll have to allow these to realign, obviously get a bit of a bid. And I think that over time, as equities start rallying, you're going to see the same exact thing that we've seen since Liberation Day. So that's kind of my take on what we're seeing there. The other thing I wanted to talk about, obviously, just take a look at the yen too. The yen is extremely overbought on the stochastic RSI. It didn't even get above the 50 moving average. I think you're coming down into the 130s, just my opinion. But again, we'll have to wait a few days to see anything happens on that. FOMC should also give us some guidance on what central banks are doing. Maybe the dollar gets stronger, maybe it gets weaker. It's going to impact it either way. But I wanted to talk about Berkshire Hathaway and what Warren Buffett was saying. And kind of like we were looking at April being one of the highest months for retail inflows into the stock market. And Warren Buffett just loaded up on more cash. There is no greater divergence than that. And that kind of just is absolutely insane. I think Warren Buffett's sitting on north of $350 billion now in cash. That's fucking crazy. And the fact that he's also coming, he's going to be stepping down at the end of this year. I mean, is there no better omen for what's ahead of us than Warren Buffett just being like, you know what? I had a good run. I made a lot of fucking money. I'm just going to call it quits on my head. And, him being in cash might be the most legendary play this cycle. I genuinely believe that, because whoever takes over from Berkshire Hathaway is going to have the most amount of capital to just absolutely make everyone who is, invested in it just trillions. I mean, they're going to be, I think they're going to fucking fly.
Yeah. And that he's leaving behind like a succession plan that is pretty detailed as far as like what, like his thoughts and, kind of beliefs for it. And you better believe that whoever steps in and takes over, maybe it'll be us. Like maybe you and me.
You and me. We'll make we'll try and get GameStop and Fartcoin into the S&P 500.
Warren, have you heard about Fartcoin?
Have you heard about Fartcoin, Warren? How about GME? How about FFAI? Speaking of which, let's talk about some of those. I just wanted to bring up Berkshire Hathaway again. I think Warren Buffett is obviously intelligent. The dude was almost born 100 years ago during the Great Depression, during the stock market crash. So, this is a kind of a legacy play on his part. And I think there's a lot of meaning to what's happening here with him stepping down as well. So let's talk about GameStop real quick, and then we'll get into Bitcoin, Fartcoin, and call it a day. So I stayed up really late last night to watch GameStop open, and it was right at the market open for pre-market. And this thing was down a little bit, right? But the market was down a lot more. As soon as the market started pulling, started being bought today, you started seeing GameStop going down more. So I'm really intrigued to see this, especially these technicals with the stochastic RSI getting pretty much close to the halfway point. It's going to go down a little bit more. There's people calling for GameStop to go down to $22. It's possible. It's very possible, especially with the MACD so extremely heavy up here. And we're looking at, some potential pullback in May. There's also more news that comes out for GameStop in June. Like they have an investor call June 8th, I think, or something like that. So there's probably going to be some more catalysts for bullish momentum. And you're also getting closer and closer to the apex, or the point where you're going to either go up or go down for GameStop. We're also seeing tons of orders being routed to the dark pools. A lot of retirement, like pensions for teachers and other institutions, are going super bullish on GameStop and buying shares. I think you guys would crush with 350 billion. Yeah, I think so too, Chris. I think we would have 350 billion dollars. I mean, let's put it this way: the Farcoin market cap would be 350 billion dollars. I can guarantee you that. Yeah, but looking at GameStop and where we're heading, there's a good chance that we pull back. I think 50 to the 200 EMA. So I pull up the Bollinger Bands. The bottom Bollinger Band touches right around here, around the 200 EMA. You can see that this is tightening up really close. It's expecting a break at some point. The question is, if something greater happens in the markets, this could absolutely negate, this period from May to July of trading within this range, and it breaks above it, retest it, fireworks. We're also coming up close on a year from when Roaring Kitty tweeted. Literally a week from today will be 1 year since he tweeted the meme of him leaning forward. So if we get that, or we get some type of news, obviously people are going to go stupid and buy it. But BlackRock even put in $1 billion bet on GameStop the other day right before the end of the Q1. So, I'm looking at this. It was from Q1, I think. Or no, I'm so stupid. April. It was from April. It was from their 13F releasing. They bought $1 billion worth of GameStop. So there's definitely big players out there that are hedging, and they know that there is possibly a big move coming. Looking at FFAI as well, this is pulling back a little bit today. It's coming down the stochastic RSI. I'm looking at the 105 range. It's also, I think, if I pull the Bollinger Bands, that's where the midpoint is. Could it go down to 82 cents? Yes, it's likely, but I also think that there is going to be continued acceleration if we get some type of news that someone was buying more of this. We got earnings in 21 days. GameStop's earnings are in 30 days. So there's a lot of things lining up for bullish momentum in the second half of May into June. That's just my opinion looking at it. And that's where I'm expecting there to be some volatility to the upside, most likely. Again, not financial advice. That out of the way, let's look at what's important. We got Bitcoin and Farcoin. Where should we start today?
Let's do Bitcoin.
All right, let's go to BTC. Yeah, 94. Looks like it's coming down to stochastic RSI. Bullish momentum on the MACD. Looks like it's turning over a little bit as the volumes are dropping. I think that there's two scenarios, right? Because there's a good chance. I think MicroStrategy also is talking very similar around that GameStop meeting dates in June. I think there's a chance that we could see a slight pullback, and then we push up higher into the summer, and Bitcoin gets to that 110K level. I think that's where Bitcoin eventually will go. I just don't know if it's going to be in this move to the upside here, or if it's going to be, one pullback down here. I think me and House were talking about like the 88K level last week, and then maybe it pushes up higher. Again, we expect a market pullback, and if that makes sense, then we push this down. We have some of the excitement over the summer. There's some type of money that comes in. People are more bullish. Trade deals are coming out, so people feel safe to invest. And, unemployment doesn't matter whatsoever, especially with people losing jobs. We just keep pushing up higher. And then we got some point in the summer, I think we're going to see that top, and, Bitcoin dominance being very close to 65. As it pulls back, we're going to get this insane altcoin rally. That's what my opinion is. I think we need to see Bitcoin pull back for that to be the case, though. And that 110 level is, I think, the level where you could say that alts might have the opportunity to push up. Looking at alts right now, and again, I'm just talking about alts because I do think that we are going to see a slight pullback. They might get hurt a little bit in the next few weeks. Where are we right here? We're at $104 billion for alts. Looking at this here, we just got right above the 200 moving average. We lost that. We're hanging on the 50 moving average. If you get some type of move to the, downside for Bitcoin, this thing's coming down a lot faster. You got an ABC up here. You can't hold the moving averages. I think alts are still in a play of a pullback. And that kind of goes in line with what we're seeing with Farcoin. I hate to be a Farcoin footer because I genuinely do think that this is going to be a crazy summer for Fartcoin, but I do think that we are going to see a pullback for Fartcoin, and that pullback might allow some really good entry levels for this blue chip token. It's an amazing coin, guys. But yeah, we got 5 waves up here from the handle breakout. I think we are going to pull back to maybe the 50 moving average or this white line here. You're finding a little bit of resistance today. You broke down below it, and then you hit this, and then you can see that wick to this level. I think you're going to roll over if the broader market rolls over. That doesn't necessarily scare me, though. I literally have USDC on Solana ready to go to see if I can pick some of this up. 82 cents, 50 moving average. If that doesn't hold, you're coming down to at least, I would say about 65 cents. 65 cents seems to be where there's support. It's just 82, 73, 65. Those are levels where I think that we could potentially bottom at one of those. And then, like I said, if Bitcoin pulls back after getting to 110, there's a good chance that something as small cap as this just has a fucking amazing month or two. And we're looking at, all-time highs and potentially the new Shiba Inu. So I don't know if you got anything to say. I'm bullish on it, but I think that there is going to be a pullback. You got any news for me?
No news. I'm just, I'm comfy in my position, and I'm ready to ride it out this summer.
Yeah, I'm just looking at this too. Like, volumes dropping as the price is pushing up. We are going to see a pullback most likely, and where is it right now? If we pull back down to the 83 to 68, let's say 68, best case scenario, so we can load up on some more to all-time highs. That is a 355% move to the upside. If it goes, let's just say $5 conservatively, right?
That seems reasonable.
$5 is why? Oh no, I fucked that up. I fucked it up big. I was about to say that's the same exact amount I just said a second ago. It's about 700% move to the upside. I wouldn't be upset with that if I bought it like 82 cents. It's a fairly healthy move, especially in a liquid market. And again, this is going to be the summer of small caps. I say that for both crypto and for TradFi.
Fartcoin summer, baby. All right, that is going to wrap it up for today. We'll be back on Wednesday, a little bit later than normal because we're going to get through Jerome Powell's presser. I'm going to want to hear what he has to say there, and we'll break that down a little bit. Yeah, his depressor. It's going to be, I gave my takes earlier on how I think it's going to go. We'll see if I'm right or not, but either way, the markets we're going to see some volatility on Wednesday, so be prepared for that. All right, that'll do it. Appreciate those of you who joined us. If you have not yet, hit the like button, subscribe to the channel, drop a comment. Stay safe out in the markets, everybody. Have a great rest of your day, and we will see you next time. Go Nuggets.
Take care, everyone.